Good morning, good morning, good morning, everybody. Hope you guys are all having a great day. Hope you guys are having an awesome day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everything is going well. Let me know if you can hear my voice. I'm having a hard time seeing if everything is working effectively this morning. I want to make sure that you can hear my voice. So type in the chat window if you can hear my voice and see my screen. That would be amazing. I want to make sure that we are good to go. So it's Monday morning. We are going to do what we do each and every day, looking at our futures markets from an educational perspective. I've got a little truncated time today, so I'm going to go a little bit quicker than usual, and I'm going to probably just start by looking at the four screens, and then I'll go down to the smaller ones after that. So I want to at least get started in our markets. For now, there's a couple of lines on here that are from last night's live trade room, so those are what we will start with today. Okay, good, appreciate that. So the ES is down 24 points, the Nasdaq's down 75 points, the Russell is down 22 points, and the Dow is down 232 points as we're seeing a little bit of an overnight sell-off. It's funny that we can talk about the Dow being down 230 points and just call it a little bit of an overnight sell-off, right? Well, when you're dealing with a Dow at 30,000, you're going to see much larger moves in a magnification scope. Well, when I look at these markets, of these four markets, technically, when I move this to a 4-hour chart, 4 hour, 4 hour, as we say in Pittsburgh, 4 hour, 4 hour, four interceptions, killing me, Ben. On our 4-hour chart, we can see that in all of our markets, we are still in an uptrend. Okay, all of our markets, we still have higher swing highs, higher swing lows. We're still in an uptrend overall. Now, if I move this down to a 1-hour chart, slide this to a 1-hour chart, we can see that we are seeing our uptrend is getting a bit weaker. And so that we might be in for a little bit of a pullback. Now, if we are, I actually like the Russell and the Dow a little bit more this morning than the other two markets because I think that they're setting up for some potential breakdowns. Starting with the Russell. We have this little rally-based rally level right here. We touched it once before. We touched it again in the overnight. Now, this was the line that I drew last night in the live trade room when I said, well, if we come back below here, you could get a drop down into this range, but we would need basing. And I did not do a set it and forget it style trade because, first of all, I don't do set it and forget it. Those typically turn into set it and regret it. But I will at least set up an alert. Well, now I'm alerted. Now this is because we hit that level and bounced off of it and then came a little higher. That's actually a great sign for a potential breakdown below this level. Now, what that would mean is that we're in for a heck of a bearish day, right? I mean, if you think about it, we're already down 1%. If we drop further, it would be a very big bearish day. But I think it could set up. And as that bearish day continues its setup, I think that we would have a really nice first target down here at about 2040. And I say 2040 because of these wicks over here that may act as areas where people place some buy orders. So I would say your first target there would be 2040. And then your better target is this area of demand down here. Now, this area of demand was formed at a market open. It's a bit of a wick over wick above a pivot low in a very clean area. So, do I think we're going to make it that low today? I don't know. That's a heck of a day. That'd be about a 60-point drop overall in the Russell, and a 60-point drop in the Russell would be about a 65 or 70-point drop in the S&P, and about a 700-point drop in the Dow. Now, we did have a pretty big drop on Monday of last week as well. As we saw that Monday we had our big sell-off Monday of last week. It dropped from 1991 down to 1920. So about 70-point drop from the high to the low in the Russell. So can we get back down to here? You bet your assets we can. And I think that that there's a potential for a breakdown if we get the right type of basing. Okay. The Dow also has a very similar setup as we are sitting above this area here. So you could, if you're more comfortable taking it in the Dow actually works out really well above 3692, somewhere in that range. Now, the reason that I went with this one was because of this area of resistance over here on the left, right? This area of resistance, which was our previous all-time high that we hit in the Globex session last Sunday, right? You got to think about it. The last time we did this Monday morning DMC, the market was up here, right? So last week when we did Monday morning's DMC, we were right about here, and so we were just below the all-time high, knowing that our momentum was slower. This time we are fairly well below the all-time high. And I think that if you see a breakdown below here, then you've got a target right there at that little wick over wick, also formed right around the market open. So both of those I think are fairly clean areas and opportunities. When you come into the S&P and the NASDAQ, I just don't see as clear of a setup in the S&P and the NASDAQ. The ES does have this 3775 where we bounced off of, and its resistance, but that's kind of far away from where we are today. So I think you'd be better off with the Russell and the Dow. NASDAQ as well, same thing. Now, by the way, all of these we can still continue to trade higher. So just look for where's the reversal if we do trade higher. I'm not ready to nail in the towel on the fact that the markets are continuing to rally, but I wouldn't be surprised to see a pullback today or the next day or two. Okay. Shadow trader called those liquidation breaks. Are you talking about those breakdowns, off the all-time high, like the Russell and the Dow, Dennis? That would make sense. All right, so those are those four markets. Let me get rid of these. And like I said, I'm going to go a little bit quicker today because I want to be done by quarter past. I'm already halfway there. So let me share this grid. Now, even if I don't get through all of the markets, I will still post. All of the grids to the trade feed for Traders Army members, so that will still be posted. Okay. Head and shoulders setups, potentially a head and shoulders setup. Ted, I think that there could be a head and shoulders setup, but I don't really see that on the 4-hour chart. I'd want to see that on the 4-hour chart to give me a more clean picture. And I don't really see that. All right. So that's equities. Next, energies and metals. So I will say that we had a crude oil level last night. Friday's crude oil level worked out really well. We got a nice touch and go off of that zone. Let me know in the comments below if you're able to catch Friday's crude oil level. That was a really good trade. Got a nice move away. Hopefully you closed out of that before the weekend hit. We don't want to hold those kind of things over a weekend. And then what it did was it did pull us back down off of that level. So now we're looking to get below 51.37. Do you think all of this impeachment and Capitol riot issue will cause the market meltdown? Jersey, I don't. I think that impeachment is really just shadow games at this point, because I mean President Trump's leaving in 9 days anyway. What's going to happen in 9 days? I'm sure that that the impeachment is really just to really just tarnish the legacy even more, and I think it's more about egos than anything. And I think that the market is pretty much priced in what it thinks it's going to do. And the Capitol riot issue, here was the candlestick during the riots. The market didn't give a rat's behind. That's crude oil. I'm sorry. Let me go to the equities. But we can get the exact candlestick. It was actually really kind of funny for me to see the candlestick during the Capitol riot issues. Here it was. Here was our riot candlestick. It was literally one candlestick on a chart. That was it right there. And then the market. So the market basically ignored it, called it a non-event. But the market basically said, listen, just because a bunch of people are storming one building doesn't mean that we're gonna freak out. I mean, because it's not it's not a prolonged issue. People will eventually get over it. Is what the market is telling us, right? Um, so in crude oil, it actually caused a little bit of a deeper pull. But so now, if you're looking for crude oil to pull back, you would want to look to below this 51.37 on a breakdown. I think that's actually the one that makes the most sense. There's an opportunity on that breakdown if you get the basing. You may not get the basing, and this just may act as an area of support. So while I don't think there's a great area of demand down here, because there's really not a great area of demand down here, um, you could get a long candle to candle opportunity, and the long candle to candle opportunity might be the best play, because this is the kind of trade that you don't have a great zone, but you do have an area where you anticipate price will bounce. Do I know exactly where it would be? No, because it would be somewhere in this range. And I don't know exactly where that would be. So now that would set up for a candle. Now that's if you don't get basing. If you come down here and you get really clean basing, then I think you're okay for the breakdown. And the reason for that is because none of this is clean demand to stop you. So I think you do still have room to roam. Gold. So last night in gold, we talked about this area of supply as a potential entry. We did actually retest into that level. 1, 2, 3, 4, 5, 6 candles later, you're right at break even. Although it did not come up to where the stop loss would be, came pretty damn close. So if you left this trade on overnight with your stop loss in play, and you got up this morning knowing it would be about 6 candles when you wake up, then you should have your stop at break even at this point, which has you at a little bit of a profit. If you didn't take it, don't feel like you missed anything. Although I do think that the probability is that we'll continue to trade down based upon our 4-hour trend direction. We'd rallied back up into that more aggressive short area if price continues to trade down from here. Now, I think that we have, if you don't get short on that, you can take a look at where's the next area to get short. You'd want it to fall a bit further and then look somewhere in here at potentially a reversal trade. But in order for that to be valid, we're going to have to put in a lower swing low than this low right here. So I don't really have anything yet on gold. If something comes up today, keep an eye on the trade feed. I will put it in the trade feed for the day. Nat gas. So we talked a little bit about nat gas yesterday. Nat gas indeed gapped down, but gapped down in the context of our bigger picture move higher, and so didn't really give us the gap and go trade. We talked about, you could have a potential breakdown here, but I will tell you I was not around for this breakdown, and if you took this breakdown, it was very quickly stopped out on this big green candle, which I'm not sure where that gigantic big speed candle came from, but we did get a big green speed candle. If you didn't take anything there, good. I wouldn't take anything at all. I don't think there's anything on here worth trading today that I'm gonna look at. Copper came below what I said we could have a breakdown point last evening. Unfortunately, it didn't give us any basing. Now, we didn't hit the area of demand, got a little move away, and if you took the area of demand, because on your 4-hour, that's a pullback to an area of demand, but on the 1-hour, where you got hit. If you were up and you took it 1, 2, 3, 4, 5, 6 candles later, the market's gone nowhere, telling you should probably get out of Dodge. I think now we're better off looking at potential shorts because we put in a lower low. And so I would look up here as your next potential entry, that little wick over wick right there, if we get a quick retest of that. All right, let me share this one. All right. Now, here's what I'm going to do. I'm going to open up in the chat window because I told you I wanted to keep this today to about 15 minutes. I'm running a little longer. I will post all the rest of the grids. It may be a few minutes later that I post them because I've got to go be Mr. Dad for a little bit this morning. But if you guys have anything you want to look at now, please type it in the chat box. I'll give you a few minutes for anything that you right now want to look at, and we will jump in and take a quick look at them before I head off. If there's anything particular that you want to see, the 30-year last night did come up to our 15-minute level, kind of chopped around. It's gone nowhere since the entry, but I do still think it's going to continue to come down. Euro, Canadian, nowhere near our supply levels. New Zealand dollar is just sitting on the breakout line. Hasn't really gone anywhere. Great British Pound. Japanese yen just missed our entry, and then the Aussie actually hit our entry, and it's gone basically nowhere. If you took the Aussie short last night, you should move your stop to break even at this point. Yeah, let's take a look at the euro real quick. So my level in the euro was actually this area up here, which was the gap fill, because this is a nice rally-based, very strong drop move away. We just haven't really gotten any fill on there. If you go to a 15-minute chart and you want to take a breakdown below here, I mean that's a potential breakdown. If you want to be a bit more aggressive, there's even if we get a pop up here in a little potential right there. Yeah, I saw that wheat blew right through that zone. I'll pull that up here in just a second. It just cut through that one like a knife through butter. So 1.22, 1.220 is kind of where this euro 15-minute level is if you're interested in it. Breakdown below here is actually pretty clean, although we've got a better one from a couple of days ago, I think that is. Yeah, a bit lower. So keep that in mind on the euro. And then in wheat, I did say that we blew right. I mean, I don't know what the heck happened on there. Oh, sorry, William. Mr. Street, I'm sorry, because that's a good level, right? I mean, this level makes sense. It was formed at a decent time of day. I'm not exactly sure what news came out that caused this to occur. What's funny is that well, not funny, because it stinks when you get a stop out like that. Is that it was the only commodity that did that. It's the only commodity that gave us that big expanded range candle. Very similar to the one that happened in natural gas, because that was a pretty good little level and a pretty good setup. So, and it went above. Now, I will say this: when you get stopped out on those kind of positions, first of all, I want to get stopped out quickly. I'd much rather get stopped out quickly than take a long time. Like, don't prolong the agony, right? Um, yeah, absolutely, no doubt, and that's exactly kind of what happened here. Now, in our bigger picture, in our 4 hour, that was, we had a lower swing low and a lower swing high, so that was a little bit speculative. If I recall correctly, last night this was the one where the zigzag hadn't given us. No, the zigzag gave us the lower swing low and lower swing high. Yeah, it just popped below. So that would tell me that I'm gonna leave everything off of here for today for the most part. I'm gonna remove that level. What's funny is that our flip level held really well. It just didn't get us a confirmation trade. This was the flip level we talked about a couple of days ago, because this was a supply that also got blown through on an expanded range candle. So interestingly enough, looking at wheat, when we have supply levels getting broken, they're getting broken through on expanded range candles, but that's still in the context of what the market's considering a bigger picture uptrend. So, this would tell me that longs would be the way to go. Do me a favor. I'd love it if you guys would share this daily market commentary with others. We're really doing our best to kind of grow the channel. So if you're part of a WhatsApp group or a Discord group or a Facebook group or a smoke signal group or a parlor group, oh wait, can't be parlor anymore. If you're part of any of any trading groups of people that you're with, I would love to. I'd love for you guys to share it with us. So I appreciate you all very much. Peter, you took the over on the Cleveland Pittsburgh. You know what? That was kind of a no-brainer. I will tell you. I will tell you the Washington Tampa one was also one that I thought was a bit of a no-brainer, but that's just me. So, oh, Manzone, I was trying to ask about last week, talking about the breakdown below 638. Let me go back to that, Liz. Talking about in wheat. Got it. Yeah. So I see that point. Yeah, that's the and that flip. I do like flip levels. You know, we don't talk too much about them in the daily market commentary, but I do like flip levels, and we need to talk more about those in the live trade rooms, which will start to bring a bit more to it. So, all right, everybody, I will talk to you all later today via the trade updates. If you need anything, let me know. I'll talk to you soon. See ya.